Hello, traders. It's Thursday, the 28th of June, 2018. It's 8:02 a.m. Chicago time. Thanks for starting your trading day with me. Appreciate it. This Trader Bite's intended for preparation, anticipation, and execution. This is the daily prep that I'm doing and the scenarios that I'm looking for. Things hardly ever work out exactly as planned. Sometimes they do, but coming in with a plan is better than anybody who's coming in without a plan at all. The derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The allocation this morning is to safety. The market is in risk-off mode. Yesterday, what an interesting day. It's difficult to classify even. The point of control never moved on the ES from the IB. Very wide IB yesterday, on and on and on. But we are continuing what we started on Monday, which was to tackle a 2,700 century figure, and we pushed through it this morning with gusto. So that's where we are, risk off. The DAX is the biggest loser this morning, down 1.35%, 169 points, followed by the Euro stocks down 0.86 or 29 points. The cable's off also, strangely. The Dow's down 127, NASDAQ 27 points, the S&P 8 points, the Russell 4.6. If you recall yesterday, it was risk on except for the Russell. Gold's also red. Pretty much everything is red except for the Bund this morning. The Euro's off by a pip and the yen is unchanged. So this is where we stand right now. Here are the scenarios that were expected. We got scenario 2, then 1, and then 1 didn't go far enough. This is total miss here. I was looking for a push on scenario 2 towards 46, 48, and it took us there yesterday. But that was intended to be, that was really looking for a push and holding up in that area, essentially taking back the flagpole, the inverted flagpole of this drop from Monday, which it did, but then it also took out the low of Tuesday, and it challenged the low of Monday as well, which was part of scenario 1, just didn't go far enough. It's really interesting because you're required to change gears in terms of what your expectations are of range. I'm always conservative with my projections. On range, because for those of you who've been following for a while know, but I'm very conservative with what I'm looking for from the market. And in essence, I'm looking to net out at a minimum of 2 points per trade. Per contract, per trade. If I can get that, and then you throw in the losses, the expectancy remains positive. But really, in this environment, it's really 3 points. But really, to have range push that far, I'm not geared for hanging on to a full unit for the entire drop. I'm just not that kind of trader. And I don't want to be. I'd prefer to be right small often. I'd prefer to be right small often than right big seldomly. And that's really the career that I've built for 18 years. It's just taking nibble, nibble, nibble. I'm not a shark. I'm not a big shark in a small pond. I'm not a small shark in a big pond. I'm shrimp. down below, eating whatever the sharks tear up and that floats in my direction. And I just wait and I nibble whatever I can. Now that seems denigrating, but in order to be a shark, you have to have the pockets of a shark. You have to have the belly of a shark, and the muscle of a shark. So that's really what I'm after. I'm after it working out. Being in alignment with the market and surfing with the market, more so than being right on some big move. Now, I got to tell you, I've been in this business long enough to say that entire chat services and education programs were built on a call that held, where the person held for 50 points on a 20 lot or something, and that's considered genius. But for staying power, I believe, what do they say? Cockroaches survive nuclear wars or something. Be the small guy who can eat and tuck away. That's me. Not very pretty in terms of descriptions this morning. Here's what actually happened yesterday. We had an open auction that extended down and then pushed right into 42, 45, and 48, and then back. Yesterday was riddled with news releases, all kinds of just BS. Lots of rhetoric and lots of this and that, and the Supreme Court this, and it's just a lot of stuff. And I love the volatility, but what we have is we're in an environment where one person says something, and then another person takes that first person's words and walks them back. And then when they realize that, the market's tanking or this is having an adverse effect on our ratings, then a third person comes in and says, no, this is what the first person meant. And so it's just really odd. It causes volatility. And of course, the market is always allergic to risk. And so they act very aggressively towards moving away from risk when that shows up. So yesterday morning, President Trump walked back his tough stance on foreign investment. That was a 27.12. We ripped up to 27.35. We opened. We pushed through to Monday's high, unbelievably. Pushed through that into the gap zone of 48. Monday's high was 46.25. Pushed into the gap zone of 48. We didn't even get to the mid of the gap zone. And then we started to walk that back. And then as the day wore on, it just seemed like there was more and more stuff that needed to be priced in, and the market just couldn't take it. We pushed through and formed this low volume node through this pretty explosive move down and then start to drift down. It's like they just could not help but pound on everybody that was long. The SOC was down here. If you recall, 27.12. We bounced right off of 27.12, 27.19.75. That was the key target below. If we were to extend the range lower, that was the key target. The SOC stands for the scene of the crime. The scene of the crime is the point, is the last print before the auction was interrupted by a news event, be it an economic figure, a talking mouth, whatever it is, some event globally interrupts the markets, and we call that the scene of the crime, just like every criminal, whatever people say. Often criminals can't help but go back to the scene of the crime, and the ES very, very, very often does that. And that's what it did yesterday. It bounced to 1975, pullback to 12 and 12 again. So we dropped to the 12. So that becomes support for almost 8-point bounce, which is not bad. And then it breaks through, and then it becomes resistance right here. Support turned resistance 27.12, and then it pushes down 27.03. If you recall, the low the other day was 2700.75. on Monday, and we pushed one tick higher than that and then started to climb. This run here near the close started to show signs of buyers stepping in and really getting some return on their effort, getting some headway. And but all overall, it just could not hold. It went to 15.5, and then the extension. So that was impulsive. The extension of that impulse only got a tick before they puked them out, and we finished near the lows. The point of control remained inside of the IB. However, there was quite a bit that traded down here. It almost seemed like it wouldn't take much, and we can find out exactly how much. It wouldn't take much to move the point of control down to this stock zone of 2704.75. This is a key low volume node. So what we had yesterday is a neutral extreme down day. Neutral extreme down. Generally, we get good. 1 second. Sorry, I had to cough. We get good continuation on this. So what kind of continuation did we get? Well, switch to the overnight chart for that. So we reopen at 2705.50, 2705.75, and we just chop in an upward skew in the Asian session. Europeans pop in right here. The Asian session just not very effective. Heavy volume, 349,000. That is 3 times the common volume for the overnight session in the ES. So a lot of activity in the extended hours. And we end up testing higher. We test lower, back to the open. We test higher. We test even lower, lower high. And what we have is a price action corrective here, and then it just spills. And this spilled right before the big numbers that were released this morning. GDP came in at 2.2% versus 1.9. This is Q1 final, and an annualized Q on Q came in at 2 versus 2.2. Initial claims came in a little higher, a little worse as well. We have multiple distributions on the overnight session, so we have a bit of a battle going on, and the cutoff point is 2700, acting as the low volume node in the overnight session coming in. Really messes with my plans that I had drafted up for today, the scenarios that I drafted up for today last night. This isn't the chart that I wanted. Let's switch this back. RIR 60. And so my scenarios. Overnight low, 26.93 1/4. Overnight high, 27.17 1/4. And currently trading 26.97. I expect the market to be responsive. This morning, we have extended Monday's sell-off. I expect that prices are relatively cheaper at this point. I'm looking for an open auction out of range that extends lower, potentially to push the overnight low. And then I'm looking for an impulse that brings us back to battle this 2700, and then for us to break back in and consolidate in this 2705, 2704 area for continuation and hold. That's scenario 1. That's the expected play. Every time, if you look back at your bigger picture charts, every time we push through the 2700, we on the first test we would get a pretty good bounce. So that's why I'm looking for a responsive, or that's partially why I'm looking for a responsive. If not, then I'm looking for a market that is pushing lower and then consolidates, has wide swings, and then has trouble pushing in and holding the prior range. Finally, we get the push down Again, consolidate, consolidate, and then finally spilling. And then I'm targeting 2685.50 as the key target below. But of course, it can extend down to 2678, which is the next stock zone beneath that. That could be the extended target if we have more spilling. Overall, sellers have done a good job of challenging buyers for the last 3 weeks or so. Sellers have been persistent in terms of delta of pushing prices lower. So if you do a cumulative delta going back about 3 weeks, you'll find that it's relatively negative, around negative 48,000 or so. And they've gotten paid for that effort, right? So as these sellers continue to get paid, there's a point where sellers will continue to sell, but they will not get paid as the market finds its base of buyers. And then as soon as a turn comes up, we would have a very fast short squeeze that looks a bit like, the kind of movement that looks a bit like an impulse up, kind of like this bar, but that would be the day instead of just a 15-minute bar. So this is the nature of the market. We test one way, we test the other way, and we move back and forth. And participants in here are betting today on some future outcome in terms of them getting paid for their effort. Okay. So those are the two key scenarios. Now we're opening out of range. Of course, we're opening inside of this big MC. So we are at a higher risk, and I'm not going to draw it in here, but we're at a higher risk of an open drive. So opening out of range here, we're at a higher risk of an open drive. This is the kind of morning where you don't want to, unless you have some systematic trading thing. This is not the kind of day where you would want to bet early. This is the kind of morning where you want to hold off, stay steady, and wait for the stronger hand to show itself before stepping in. That's how you can get paid best, or at least get the most out of the risk that you're taking. So this is one of those days where you could just it's good to chill, sit back for the first 20 minutes or so, and let things play out. As I'm talking, this is already becoming responsive. We're moving back towards 2,700, so this may be knocking off some of these scenarios already, or one of these scenarios already. But the farther away we are in a gap, the more likely an open drive or an open test drive is to take place. Anyway, I'll leave you with that. That's all I have. Good luck. If you want to continue the conversation, by the way, convergenttrading.com. Convergenttrading.com. You probably noticed I'm not talking much on Twitter. I just don't have the bandwidth right now until we customize a chat room so that I can chat in a chat room and post on Twitter occasionally. But if you want to join a serious conversation about trading all day and sometimes all night, it seems, then convergenttrading.com. See you there. Good luck.